Hey YouTube, Tactical Tummy here. I wanted to talk a little bit about market corrections and go over some of our recent history in the United States about how people have responded in the gold and silver community as well as in the investing community on whole to these different market corrections. I am old enough to remember back in 2008, I know there's some younger folks and younger viewers out there that might not remember the 2008 financial crisis, but the 2008 financial crisis definitely shaped a lot of our financial views back then because it felt like, we had an amount of money and then overnight it felt like it was cut in half. And that was a very, very scary time to live through. And that definitely scarred a lot of us, and that definitely pointed a lot of us right here to silver and gold. It got us thinking about how we could get away from our paper fiat and move towards buying silver and gold as an alternative. So that kind of idea that, maybe it's a good idea to have a hedge against the stock market kind of took root for a lot of people in 2008, and this kind of went along into, a lot of that early YouTube silver community because people were scarred from the 2008 financial crisis and they wanted to find safety, and safety they found in gold and silver. So I think that gold and silver still does offer that hedge and that safety net for people. The thing is, though, is that what we saw is that people got in, especially, 2008, and then when silver was hitting its highs back in, I believe it was 2012, when it was, just for a very short time, it had spiked up. People, unfortunately, that's when they were doing a lot of their buying into silver, and they still have not recovered because they spent way more and bought in at those higher prices as opposed to dollar cost averaging into these prices, the higher prices over time. Because if they had dollar cost averaged into those prices over a very long time, they wouldn't be getting screwed and they wouldn't have paid that huge upside and bought at the higher prices. I think that this all goes back to having a strategy and sticking to that strategy. Because if they had bought at those higher prices, well, guess what? They would have missed out on the recovery of the 2008 financial crisis, and that continued recovery. I know it was slow at first, and for a number of years it did stay down, but especially once 2016 timeframe kind of rolled around, right up until 2020, that was a historic recovery where stocks really made a lot of growth. And if you had completely sat on the sideline and only invested in silver and gold, well, you would have missed out on a lot of those gains. So this needs to be a word of caution because you need to have a balanced investing portfolio. It shouldn't all be silver and gold. You probably do have room for stocks so you don't miss out on all of those gains. So this cycle has repeated itself in history because then we saw in 2020 during the COVID crisis, we saw a lot of people. I was working at a bank at the time, and people were coming in so scared and they wanted to cash out those 401ks and they were going to buy into cash, or they were going to buy into gold and silver or lots of other physical things. And unfortunately, you can only give them so many warnings because once a person has made up their mind to go into something wholeheartedly, it's going to be really hard to turn them around and have them warned off of it. And that's a really, sad thing to see because, these people were selling at all-time lows again, only for a recovery to come around and them to have lost out on money. Now, this time in 2020, we didn't see that spike, and maybe, some would say that, the 2008, you didn't see a spike in precious metals until later, until I believe it was 2012 when we saw the spike. And maybe this bull run that silver and gold has been on recently, maybe that's part of the later spike, or maybe there's some kind of a delay when it comes to silver and gold price spiking after we have some of the financial hard times. And maybe that's, part of the bull run we're seeing now. Who knows? It's very, very difficult to predict the future, and even people with PhDs and people with hedge funds and people that get paid millions and millions of dollars cannot predict the future. So I'm not going to pretend that here I am sitting with a lowly YouTube channel that I can predict the future, because that's just not possible and not viable. But it is sad to see that the cycle continues to repeat, that people get scared, they move into these safe haven assets like gold and silver or cash, and they end up losing out on those stock market gains. I think that a much better strategy is to go in before we have a crisis and decide, how comfortable am I in my stock portfolio? And if you are at all uncomfortable with the amount you have in your stock portfolio, then you should have too much invested in there. You maybe need to transition a little bit into gold and silver. It's too late to make the changes once the crisis has already happened. I cannot implore that enough. But unfortunately, that's how people's minds work. They get terrified when crises happen. And, you know, that is how the human brain works. And that's the thing. We have to build a system so that we are not going to fall into those same mistakes. I think that it's really, really helpful to hear these things and get prepared for these things before a crisis happens. And no, I'm not going to say that the next crisis is around the corner, because there's always, you know, someone calling for a crisis to be right around the corner. And like I said before, we can't predict these things. We don't know when the next crisis will happen. We just can be prepared for it when it does. Part of that preparation is owning silver and gold. Maybe part of that preparation is owning some stocks and being ready to buy stocks to take advantage of the recovery when the recovery happens. Because if there's one thing that I have learned in my investing career, it's that, you know, as broken as the system may seem, and I know that a lot of us can point out a lot of the different aspects of the system that is broken, but one of the things that our broken system is remarkably good at, it's remarkably good at adapting and being able to make more money in the future. Because lo and behold, no matter what crisis it seems that gets thrown at it, somehow these companies and people are able to still find a way to make money. And in a way, that's a good thing, because we need to be able to have recoveries and to have businesses keep making products, us still to be able to go to the store and buy the things that we need. It's okay, and that's a good thing. We shouldn't wish for these crises, and we should be prepared to take advantage of any recovery that does happen after a crisis. So, all that being said, I want to give this as a word of warning for everyone before any crises happen, to make sure you have your financial place in order, and make sure that you have it ready to go. You know how you will respond when the next crisis happens, and you're not going to be one of those people that's running out and buying or selling when a crisis happens. You are going to stick to your plans, stick to your guns, and be ready to ride out the storm. And that is what I want to encourage everyone to do, is ride out that storm and be prepared to take advantage of any opportunities. So, all that being said, I want to thank you for your view, and if you did like this video, I hope that you like, comment, share, and subscribe. Take care.